Good afternoon. Good afternoon. It's Monday, the 1st of December. Welcome to another edition of Monday Market Picks. My name is Silan Wickramasinghe, the head of research for Maybank Securities here in Singapore. We are in the final stretch of 2025. Risk seems to be back on in the markets, with markets forecasting 100% possibility of a Fed rate cut in December. And we also see renewed momentum in AI as well with Google's new chips. So I think the overall momentum going into the final stretch of 2025 is very positive. The vibes are there, and that's, I think, how we're going to close this year. In today's show, we're going to look at some regional winners who we think will do well going into 2026, and that's what we're going to focus on today. First off, we'll speak with Eric with his latest initiation on Centurion Accommodation REIT. Then we'll hop across the causeway to Desmond Chung, who will highlight his recent upgrades on CIMB, Alliance Bank, and RHB. Then we jet off to Thailand, where we'll have Bunyakorn discussing his upgrade on Airports of Thailand, which is actually a SGX SDR stock. And then finally, we'll have also a look at IHH Healthcare, which is a regional healthcare giant. Plus, we have some fresh ideas from our chart guy as well. So a lot to go through in today's show. Let's start with Eric. Eric, you've initiated on Centurion Accommodation REIT with Meow Meow with a buy. Can you take us through your views?
Hi, Tilan. Thanks for having me. We recently initiated coverage on Centurion Accommodation REIT with a buy rating and a TTM target price of $1.27. This is based on a cost of equity of 7% and a terminal growth rate of 2%. At the current price level, Centurion offered investors a yield of about slightly under 6% based on 100% payout ratio. And this translates to a more than 12% total return to our target price. Maybe a bit of background for Centurion Accommodation REIT. This is the first and only pure play purpose-built REIT listed on the SGX with primary exposure to the Singapore PBWA and PBSA asset in the UK and Australia. The sponsor is Centurion Corp, which we also have a buy rating with a target price of $1.52. And in terms of distribution income growth, we are forecasting the DI to grow at about 14% CAGR over the next 2 years, supported by positive rental reversion, ongoing AEI initiative at its Mandai and Dongguan assets, as well as the onboarding of episode Macquarie Park in 2026. So all this will increase the total number of bed counts by 35%. Beyond 2027, we think that growth is likely to come from organic opportunities. Gearing is currently projected at only 31%, so we think that the REIT has sufficient debt headroom for further acquisition, and this will further grow its distributable income going forward.
Okay, got it. And what do you think are some of the downside risks for this REIT at this stage?
Okay, the key risks would include cyclical macro uncertainties, which may weigh on the PBW and PBSA demand, as well as some regulatory changes and long-term land lease devaluations. The other downsides include, because we are assuming 3% rental reversion, so in the event that the REITs could not achieve this kind of rental reversion, then there could be some downside to our forecast.
Okay. We're generally quite positive on the overall REIT sector, given the fact that, rate cut expectations are very, very strong going into December. And our macro team is expecting 2 more Fed rate cuts in 2026 as well. Plus domestically as well, we've seen SORA collapsing. So that also provides a lot of upside spread for the dividend yields for the REIT sector. So do have a look at Eric and Meow Meow's note in our newsletter today. Now, with that, let's move across to Malaysia banks, where we have Desmond on the line. Desmond, welcome to the show. You're fresh off third quarter results for a lot of the banks, and you've upgraded CIMB to a buy with a higher target price of 8 ringgit 60 cents. What's driving this bullish view?
Yeah, morning, Dylan. So essentially, with regards to the third quarter result season itself, there were quite a few banks that surprised on the upside. Generally, the operating environment was not an easy one, given that the banks continued to see contraction in margins as well as slower loans growth. But if you take into consideration the fact that provisions were also lower on a year-on-year basis, the banks actually surprised on the upside overall in terms of earnings, and we had actually upgraded our calls on AMMB, RHB as sorry, in terms of upgrading the results for Alliance Bank, AMMB, and RHB in that they surprised on the upside.
Hmm. Okay. And what some of the if you take CIMB very specifically, what are some of the positive points for the stock, and also what are some of the risks that you're worried about?
In terms of CIMB, is it?
Yeah.
So in terms of CIMB, essentially what is positive for the stock is that, when you take a look at their regional operations, we do expect a recovery into 2026 itself. In Singapore, for instance, we're looking at the SORA slipping by fewer percentage points compared to 2025 itself into next year, and that will ease the margin pressure on its Singapore operations. And in Indonesia, we're looking at stable GDP growth about 5.2% next year versus about 5.1% this year itself. So the regional operations should fare better into 2026, which is what we're banging on as a whole for CIMB, coupled with the fact that they have announced that they will be returning capital of about 2.2 billion as a whole over the next 3 years. They've already announced a special dividend of 7 cents for this financial year. The the 2 billion actually translates into potentially special dividends of about 6 cents over the next 2 years. That will take the payout ratio to more than 60%, and it takes the dividend yield currently to about 6% on the stock itself. So, from that point of view, there is a little bit more excitement on the stock.
Got it. And we have seen with the Singapore banks as well, when there is very, very clear capital returns guidance, that actually tends to have a positive impact in terms of share price performance as well. Desmond, I want to now move to Alliance Bank, where you put a buy on that stock as well. You upgraded them to a buy as well. What's your reasoning there?
Yeah, so in terms of Alliance Bank, the one thing about the stock is that although the dividend payout ratio and the dividend yield on the stock is slightly lower than its peers, currently averaging just about 4%, 4 plus percent versus about 5% plus for the other banks. But the one thing about Alliance Bank is that they have been growing at a faster pace, and they're looking at loan growth of about 7 to 8%. And coupled with the fact that we expect margins to be more stable going forward, as well as lower credit costs, particularly into the second half of their financial year. We're projecting a 3-year net profit CAGR of about 7% on the stock, which is higher than most of the other banks. So from a fundamental viewpoint, it's a buy. Valuations are still decent, and the growth is slightly ahead of peers at this point in time.
Right. And I mean, there are some market rumors that DBS might be looking to, take a 30% stake in Alliance Bank. Nothing's confirmed yet. If that sort of minority stake does happen, have you built any sort of forecasts or any sort of assumptions there, Desmond, for Alliance?
No, I haven't actually. So the upgrade is purely on the back of fundamentals itself. The thing about it is that this a rumor of DBS taking about a stake in Alliance Bank has been ongoing for quite a while already. I guess at this point in time, it's up to the authorities as to whether they approve it. But certainly, if it does come through, it should be generally positive for Alliance Bank from various perspectives. For instance, in the case of their IT digital transformation itself, DBS has quite a bit to offer on that front, actually, to push them forward.
Got it. And then finally, you also upgraded RHB to a buy. And, what is your thinking there?
RHB this year itself, we were a little bit concerned that they would not be able to meet their earnings projections by virtue of the fact that they had very strong NOII growth last year from investment gains. But This did materialize to some extent, but to a lesser extent than we had thought, in that they managed to keep their operating profit relatively stable. And the earnings growth for the bank actually came predominantly from corporate recoveries. So that provided the boost to overall earnings. The one thing about RHB at this stage is that the capital ratio for the bank is one of the highest in the industry, and they're offering dividend yields of more than 6%. So from that viewpoint, the bank is more stable in terms of the outlook going forward, coupled with the fact that the dividend yields are decent.
Got it. And Desmond, before we let you go, what are your top picks for the Malaysian banks right now as we go into 2026?
Yeah, so in order of preference at this stage, it will be CIMB, followed by ABMB and Alliance Bank.
Got it. Great. Thanks, Desmond, for joining the show. With that, let's move to Thailand with Bunyakon. Bunyakon's online and he's upgraded AOT to a buy from a hold. Bunyakon, why have you changed your mind?
So we upgrade AOT to buy from hold with a new target price of 49 baht. So we factor in a 300 baht hike in passenger service charge, which is called PSC in short form, to about 1,000 baht per international outbound passenger. So previously we collect at about 730. So it's just a 300 additional hike on that, and it's likely to take effect in second half of next year, after the Civil Aviation Authority of Thailand announced the hike in the final meeting on 3rd of December, which is going to be in the next 2 days. So we also see, more upside rather than downside. Downside used to be, people talking about duty-free contact that expect to be revised in terms of minimum guarantee payment per year. That I think tomorrow they're going to have the board meeting. So it's going to be either approval or not, disapproval about the new contract. So we think at this stage it's more, upside more than downside. Other potential upside we seeing is from PSC collection for transit transfer passenger. We never collect that, and we have about 5 million passenger at the transit and transfer station each year. So that could be a billion upside on earnings. Other than that, it could be higher concession revenue from ground and cargo operators. So their contract is running out in 2026, and AOT is going to demand a higher rate of revenue sharing.
Okay, so basically we should see volumes going up as well as margins going up going into next year with all these new fees and concession payments as well. Longer term though, how are you thinking about overall passenger growth in Thailand as well as tourism demand in Thailand, Bunyakon?
Okay, so in Q4 this year, international inbound in terms of travel demand in Thailand could be recovering to the pace that we've seen in last year, Q4. So just the same level, November, December. Looking forward into 2026, they're seeing a slot booking in terms for long haul travelers. Overall bookings for slot in the winter slot is probably 17% above last year winter schedule slot. And also in 2026 overall, we expect about 6% growth in AOT total passenger traffic, which is, I think, slightly below the guidance at 7%.
Okay, and any downside risks we should be watching out for?
The only key thing is the upcoming announcement on the duty-free contact revision. We're seeing that if the King Power could not paying the debt, that could be a big risk in terms of provision. Another risk that we're seeing is the PSC high. If it's the number is below our expectation at 300 baht per international outbound packs, that could be a downside too.
Got it. Punikan, thanks for joining us. So AOT, do have a look at his report, quite comprehensive note today in our newsletter. And also remember that AOT is a SDR stock, which means that you can directly trade AOT on SGX in Sing dollars. Now, with that, let's move to IHH Healthcare, which we are maintaining a buy call following stronger than expected third quarter results. They beat both consensus and our expectations, underpinned by better revenue intensity and margin uplift across key markets. Turkey and Europe continues to outperform meaningfully with over 50% year-on-year revenue growth, supported by stable non-lira contributions and normalizing startup costs despite inflationary backdrop. Malaysia and India also delivered healthy expansions, driven by higher surgical complexity, operating efficiencies, and a notable rebound in medical tourism. Now, Singapore was softer on a year-on-year basis, but sequential progress is emerging as the group ramps up post-renovation work of Mount Elizabeth Hospital in Orchard. Now, this is a key asset, and that should gradually restore throughput and support the mix of margin mix going into 2026. With volumes recovering and the case mix actually trending pretty favorably, we are raising 2025 to 2027 earnings by 1 to 5%, and our target price has been lifted to 9 ringgit 48 cents. So momentum is coming back next year, and we are maintaining our buy call on the stock. So do have a look at that note as well, which is a regional healthcare heavyweight. With that, let's move on to our chart guy. He's got two new trading ideas. The first is SUNPOWER Group, where he has a trading buy call. Their recent rebound from its 38.2 Fibonacci retracement level has established a new upswing. So that should continue on as we progress over the next few weeks. He has a trading sell call on YANGZIJIANG shipbuilding. Momentum is leaning more towards the bearish side, and the RSI continues to form lower highs going forward. So be a little bit more cautious on that stock going forward. With that, we've got a few events coming up. We've got the PMI readings on the 3rd of December, retail sales for Singapore out on the 5th of December. We'll also be looking out on the T-bill auction rates to see where the final sort of trajectory of interest rates will go as we close out 2025, and that's on the 18th of December. With that, also quite an interesting webinar out there on understanding stable coins, which is also on the 3rd of December, 4 to 5 p.m. Do speak to your salesperson if you would like to join that webinar as well. With that, we are out of time. Thank you so much for joining us this week. We will see you next week. Have a profitable trading week.